Hello, chart watchers, and welcome to this Friday, October 26th, Market Watchers Live show with your host, Tom Bowley and Mary Ellen McGonigal, who is subbing today for Aaron Swinlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, let's take a look at the action. I tell you, we had some rough earnings overnight and this morning, and we've gotten off to a pretty rough start, although markets are way off their earlier lows. Currently, the Dow Jones Industrial Average down 326 points, the S&P 500 down 45, the NASDAQ down 148, but quite a bit off its earlier low, perhaps trying to put in a hammer. We'll see. Russell 2000 today, still pretty weak, down 23 points. 10-year Treasury yield down 5.5 basis points to 3.08%. Somewhat surprising given the stronger than expected GDP that came out this morning. We'll talk about that in a bit. Volatility index was up over 27.5. It has pulled back quite a bit, back down to 25.28 currently. To the downside, you can see this current consumer discretionary stocks struggling, down $3.32 today. That is as a result of Amazon. Talk about Amazon here in just a second. Communication services also weak due to Google. Speaking of those two, here they are. Amazon down currently $139, but quite a bit off the low. It did get down, I think, as low as 1603 earlier today. So it has rebounded about 39 off the low. Google also trying to rebound off the low, was down quite a bit earlier, down below 1050. It is back to 1072, but still down $31. Intel, bucking the trend, actually had a pretty nice report, raised guidance, and you can see Intel up 4% today. But perhaps the worst stock in the market, or certainly one of them, is Flex, down about 30% today after reporting earnings that obviously the market was not too fond of. Okay, it's Friday morning. Aaron, a little under the weather today. So, Mary Ellen, first, thanks for agreeing to join in here. How are you doing today?
Oh, absolutely. I'm doing just fine, trying to stay on top of these absolutely volatile markets, to say the very least. And interestingly, these companies are coming in with the earnings and they're actually beating, if you look at Amazon and Google, but it's those revenues that are really kicking them and just missing on those revenues, and the markets don't like it.
Yeah, it's funny you mentioned that because I have about 10 companies here on the list I was looking at for earnings, and 7 of them came in light on revenues versus expectations. And I think that is what's one of the things anyway that's spooking the market.
You bet, yeah.
And
that's on, oh, pardon me.
That's all right. I was just going to say, I don't know in South Carolina here, which is worse, the weather or the market, because the weather down here is pretty tough. It's about 50 degrees and rain, and it's cold. It's nasty. I'm ready for spring again.
Oh, my goodness.
I'm sure you're enjoying better weather out in Southern California.
Yep, sunny and 70. Yeah, that's pretty much the daily mantra.
Yeah, shocker, right? Okay, well, hang in there because I know you got a bunch of what's hot and what's not to go over with everyone. Let's talk a little bit about the upcoming schedule first, though.
Sure.
We do have next week November seasonality report, so I'll be giving everyone what they can look for, at least from a historical perspective, next Tuesday. Then Wednesday, we're going to have Dr. Alexander Elder in. Can't wait to have Dr. Elder in, give us his latest, what he thinks about the market. And then, of course, next week, Erin will be back, and she will be giving you the DP monthly review. But today, what do we have? Well, like I said, we've got what's hot and what's not. I have a feeling there's a bigger slant to the what's not side. But we'll wait with bated breath on that one. We will get the 10 and 10 to 1. First stock's going to be Digital Realty Trust, DLR. And since Erin is not with us today, I do want to say that I did things just a little bit differently. I looked at some of the stocks that have gone from scooters above 70, below 70, some big scooter movers today. I figured we'd take a look at those and just kind of get a sense of whether or not they're really breaking down or whether they're an opportunity. But we'll talk about that a bit more as we get closer. DLR will be the first one, though, today. And then the final segment today will be the sector rotation. So with that, got a lot lined up. Might as well just jump right in. We had a number of economic reports, well, a couple of economic reports out this morning. So let's bring those up. The first economic report is the Q3 GDP initial estimate, which came in at 3.5% versus 3.3%. And as I mentioned at the top of the show, I'm kind of surprised with a stronger than expected GDP reading and a 10-year treasury yield that is moving lower. And I'll bring that chart up for you in just a second. The other economic report out today, October consumer sentiment, came out at 10 a.m., 98.6 versus 99.0 expected. And that was a little weaker than expected. But let's take a look at what's going on with the 10-year treasury yield. 3.10, 3.11% is kind of the area that we were talking about as support. And you can see these two tops where we broke through. Today, we are threatening a breakdown, which I guess on the one hand shouldn't be too shocking because we have seen a lot of money rotating into defensive areas. And when the yield's dropping, that's telling us that more money is rotating and pushing into treasuries, bidding prices higher and sending yields lower. There's always that inverse relationship between the 10-year treasury yield price or the 10-year treasury prices and the 10-year treasury yields. So you do want to keep that in mind. But a move back up above 3.10%, I think would be better. I know a lot of folks spooked by the higher interest rates. I still would like to see the 10-year treasury yield moving up. I don't like the fact that the money is moving back into treasuries and sending the yields lower. I think that's less money to move into the U.S. equities. But anyhow, that is something that we need to think about. Okay, let's move on to the earnings because that is probably the big topic for today. I mean, I don't think without a doubt. You can see a couple of big names on this list. Amazon blew away bottom line, and this is what Mary Ellen was referring to. Amazon 575 versus 329. Alphabet, Google, same thing, 1306 versus 1054. Certainly on the surface, you would think, hey, those are pretty good numbers, but they both missed in terms of revenues. And I know Amazon was less than excited about the next quarter. So anything like that will definitely spook the market when you're talking about major leaders. Intel had a nice report, though, as did Gilead Sciences and Charter Communications. But you might be surprised at some of these reactions. And that is what we want to take a look at next, because these reactions really don't bode well unless we get reversals, which we are trying to do. So let's take a look first at Amazon. Amazon moving lower throughout October. This was a stock over 2,000. Remember, it wasn't too long ago. We were talking about that $1 trillion market cap right around the corner. Well, we're not talking about that anymore. Amazon now down to 1,650. And earlier today, it did hit that 1,603 level. Not too far from the high of the day, though. Still, it is down 7.48%. Let's see where this thing closes. The problem with the market, and I talk about this a lot, when you've got a volatility index up in the 20s, threatening to break into the 30s, you don't know from 1 hour to the next what you have in the market. You've got a big breakdown here clearly on Amazon. Now you've got the potential for a big reversal. I don't know where Amazon's going to be by the end of the day. I do think I've got some reasons. I'll talk to you about it just a bit. I do think that the market is nearing a bottom, at least in the short term. Now, whether or not it's today or whether it's early next week, we can, I guess, debate that back and forth. But I do think the way we finish today could have a lot to say about that. Google here, you can see also gapping down to new lows, but we do have a hollow candle in play, big reversing candle. Clearly the volume is strong. So a big reversing candle with massive volume would be a good sign for Google. And we are looking for bottoms in many of these stocks. So let's see if we can get Google to print a bottom. Intel had been in a downtrend over the past few weeks, but with its earnings report, it has gotten back above the 20-day moving average. Many of the stocks that have been under a lot of pressure here in October have not done this yet, have not gotten back above the 20-day. We do have a little bit of overhead resistance at 46, which is what Intel's been dealing with so far after the gap up today. Let's see if we can close over 46. I think that would be a short-term bonus for anyone looking at Intel. Gilead Sciences, GILD. Now, this was a pretty good report, I thought. Top line, $5.6 billion. Market only expecting $5.37 billion. The earnings, $1.84 versus $1.66. So a clear beat. But one of the problems, and I'm sure, Mary Ellen, we're going to talk about this in a little while, is that you've got the biotech group that has been so weak in October, and it's been driving Gilead down. Is this a bottom? I don't know. Gilead looks to be strengthening a little bit against its benchmark index, its peers, the biotech group, but versus the S&P 500, because the group has been so weak, it has struggled against the S&P 500. And this is what I was referring to. Biotechs, on a relative basis, over just the past 10 days or so, have broken to a new 52-week relative low versus the S&P 500. It's hard to get excited about a group that's setting new relative lows versus the benchmark S&P. So a lot of things going on there. Let's talk about a couple more stocks, though. We're not done. CHTR had a big beat on the bottom line, right? Well, look at the stock. Stock down 6% today, and it was a lot more earlier. It's down another $10 earlier. So it was down earlier about $30. Now it's 20. So like Google, like Amazon, trying to find a bottom, trying to rally back, but a lot of technical damage has been inflicted. Charter missed on the top line, even though they had a great bottom line. They did miss on the top line. Let's take a look at, let's see, what else do we have? How about Chipotle? Chipotle came in with a pretty good number on the bottom line, 216 versus 202. But once again, the bottom or top line, they missed 1.23 billion versus 1.24 billion. And Chipotle, unlike some of these other stocks, this is in an area of the market that actually has been pretty strong. So you can take a look here and see the restaurants and bars performing very well and actually moving to a new relative high, taking out that January high. And yet Chipotle, which was one of the strongest group stocks in the group, has been downtrending. And so you can see this is what I was referring to. Here's CMG relative to the restaurants and bars going higher. But over the past 2 months, they've actually been underperforming. But you do have a good group. This is an interesting, quandary. What do you do with CMG, which is in a good group and had been a great performer? Well, for me, I need to see that technical chart begin to improve, which means it needs to get through that 20-day moving average before I would even consider it. Let's take a look at a couple others. Colgate came out this morning. CL, Colgate-Palmolive. They actually matched estimates on the bottom line, 72 cents versus 72 cents, but they too fell short of revenues. 3.85 billion versus 3.89 billion. This is a pretty big support level that is being lost so far. Let's see if we close down there. A big reversal back up above, say 61, 61 and a half would hold on to that May support level. So we could get a bottoming candle here on Colgate-Palmolive. I think, the one thing as you look through many of these charts, at least when I'm looking at them, I'm seeing the potential for some very significant reversals on many of these charts. It's just a matter of what we do the next 3 to 4 hours and whether or not we get the big sell-off because of the high fear with the VIX elevated, or does it mark a bottom? Does that high VIX over the past couple of weeks, are we finally ready to put in a bottom? Let's see what happens in the last 3 to 4 hours today before we make that call. Moody's MCO came out this morning. They missed on their top line. They missed on their bottom line. And you can see the traders are not forgiving them for that earnings sin earlier today. You can see Moody's down currently 6%, $9. It too is off of its earlier low, but this is a lot of volume, and it certainly seems to be breaking down below prior lows. So stock that I would be a little careful. Okay, I talked a lot about the volatility index. Let's take a look at it. Here is the VIX. You can see many times bottoms in the market are formed when you get long tails to the top on the VIX. It's showing you that fear was absolutely running rampant intraday, but then it started to settle back down by the end of the day. And many times this can put in a significant bottom. And if we go and take a look at a longer term weekly chart and put in the S&P 500 down here, bear with me. I think this is a pretty interesting chart that I believe will be interesting for all of you if you haven't seen it. But nope, that's not what I want. Probably want to do a weekly chart that goes back more than 6 months. Let's just look over the last few years. But when you get these, look at the bottom here in January, February of 2016. See all those tails up there on the VIX? So we were able to put a bottom in the S&P with that move. And notice the range, 25 to 30 over here. So you get up in that 25 to 30 range, and that tends to mark pretty significant intermediate term bottoms. June 2016, we get up into that 25 area just above it, major bottom. Let's see, back in January, we actually had an intraday move up to 50, but we had a close on a weekly basis in that 25 to 30 range. And that is where we put these bottoms in when we get up in that 25, 30 area. Well, that's where we've been here over the past couple of weeks in this 25 to 30 area. So are we going to panic and, shoot up into the 40s and 50s and lose the February low? that's a possibility. But, you know, a lot of times we wait. You know, we're so scared to get into the market, and I don't really blame you, but we're so scared to get into the market, and then we wait. We see a big reversal, and all of a sudden the S&P is back to 2,800, and then we want to get back in. So I'm kind of watching the market this afternoon. I'm a little, you know, the way I manage risk, there's a number of different ways, but one way I manage it is to simply, when things are crazy with the volatility, but I think we're getting close to a bottom, I start maybe edging my way into ETFs. I stay away from individual stocks. I think that can be extremely dangerous, especially if this VIX were to shoot up to 40 or 50. Many individual stocks could get really hammered to the downside. Even the major indices, we've seen it. We know how fast the Dow can lose 500 or 1,000 points. But probably we're getting close to a very significant bottom. If we're not there yet, I'm going to say within the next couple of days, we are going to be there. And I look for a pretty good snapback rally on the market. I'm hoping that we get all the way back down here into the 2575, 2600 area. The lowest close that we've had on the S&P was 2582. Intraday, you can see we got down closer to 2500. So as we move down and move lower on the S&P, I think we're getting really close to this snapback rally. And so I may start, you know, dipping my toes in the water on the S&P, maybe like the QQQ to track the NASDAQ, maybe even the IWM with the dollar doing what it's been doing. When we do finally get a snapback, we may see a much stronger snapback in the small caps. But anyway, I just wanted to mention the VIX here. And while we're here, let's take a look at the Vixen, the VXN, which tracks the NASDAQ 100. And let's pull up the same chart versus the NDX, which is the index for the NASDAQ 100. Do you see these highs? Same thing. You get up into the 30, 35 range on the VXN, and that coincides with very significant bottoms on the NDX. Now, if this truly is the start of a bear market, this is not going to be a significant bottom. We might bounce and then come back down and take out these lows. That would be the confirmation, in my opinion, that we're in a bear market. But if we're truly still in a bull market, I think that this rise in the VIX and the VXN is going to mark a very significant intermediate term low. And I think we're approaching it. The other thing I want to mention, I'm going to go in here to my blog article from earlier today. A couple things I'm watching for. Here's the S&P 500 over the last month, and you can see the downtrend that we've been in. And if you come down here, the XLY, XLP ratio is telling us that money keeps rotating away from discretionary and into staples. So that is not a good sign. In the meantime, we've got the real estate versus the S&P 500 that continues to push higher on a relative basis. Consumer staples versus the S&P going higher, and utilities relative to the S&P. If we're going to strengthen, if the market is going to continue in this bull market, these trend lines have to break. You can't continue to have money rotating into defense. If it does, if the market bounces and these ratios keep going up, I would not trust that bounce at all. We want to see money rotating away from defense and back into aggressive areas. See this XLY versus XLP break that downtrend. See the S&P break its downtrend on the absolute chart here. That would be when I would begin to get a little bit more bullish. Final couple thoughts here. I did mention tobacco stocks doing pretty well here, but we've got overhead resistance we're dealing with there. And then my final thought, you know, most of the folks following me know I do pay very close attention to what happens on a historical basis. I will tell you that at the close today, there is no more bullish period than the one we are about to enter. October 28th, which falls on Sunday. So if you're just following historical tendencies, you would want to be in at the close today, because by the time we go into next week, look at these annualized returns on the NASDAQ for each calendar day. And this is since 1971. This is over almost the last 5 decades worth of history. And I can also tell you that over the course of the entire calendar year, we don't have any other 10-day period like this. The closest thing is the last 10 days of the year. That's Santa Claus rally. But this is the strongest 10-day period upcoming. I'm not saying that this is a guarantee that we're absolutely going to just shoot to the moon the next 10 days. I'm just pointing out a fact here. The market tends to move higher starting on Monday. So with that, Mary Ellen, I think we're going to get into the what's hot and what's not. Clearly, the market has not been very hot.
Not at all. It's been quite ugly, to say the least, but there actually are some bright spots. So hopefully I'll be able to brighten your day.
Yeah, I know that one area that we're going to talk about was retail. And I just want to
Yes.
show, go ahead.
Oh, no.
Yeah, I just wanted to show a chart real quick
You
on
bet.
XRT versus the XLY. So everybody can kind of get a handle here before we get into this. Okay, so let me pull I don't want the long term though. Let me get out of here. Let's just do a daily for the past few months. Actually, let me go ahead and do it this way. I mean, I won't bother putting it into a line chart, but you can see where we had closed on the XRT versus the XLY. So on a relative basis, we were down here at the beginning of October, and now we're up here. So on a relative basis, what we're seeing is retail stocks. And the XRT, by the way, is a very highly diversified retail ETF. So it's telling us that overall retail is hanging in very well versus the discretionary stocks. And I know you've got a number of stocks, Mary Ellen, that you wanted to share. So why don't you go ahead and take a look at some of those retailers for everyone?
Yeah, you bet. And the one thing I will tell you, retail is an area that is dear to my heart, and it's not because I'm a big shopper. It is because as the market goes, I'm always on the prowl for high quality growth stocks that are poised to outperform the markets. And having been doing this for ever so many years, oftentimes you will see retail and tech do tend to bubble up if they have the right story, the right combination. And so interestingly, the retailers were the first to crack, so to speak. And as we get in, I'll show you some examples, but this is in September. That area was the first to start to fade, if you will, and give signs that the market all might not be well. But let's take a look here. What I'm showing you is the 1 week. This is you can get this very easily from StockCharts.com, their major initial page interface. We're looking at a 1 week, and I think this kind of tells it all, because as of last night, there actually were some areas that were green, but everything is red. So we're down pretty much all across the board. But let's go ahead and jump in and take a look at areas. Tom did mention some of these retailers, and I'll go ahead and dig right in. These are stocks that you wouldn't know what was going on in the rest of the markets if someone were to just have shown you these individual names here. The first one that we're looking at here is Burlington, and I'm just going to take a second and log in so we can get the full view here. And Burlington Stores is a company, it is a retailer, and they are located across the country. Take a look at this uptick here. They're up again today, almost 2%. And this is a stock that has been really doing quite well. And I will tell you, discounters in general, as it relates to retail, that is the area that is doing well overall, despite what's going on outside in the broader market. So what I'm showing you here is this move throughout 2018. This is a stock that has been on my suggested holdings list with my newsletter, and you can see how it's had a generally very strong uptrend. The company is expanding. They are opening up new stores, and they have a wonderful management system in place that the street likes. So Burlington Stores certainly is a name that looks really quite attractive, again, relative to what's going on in the broader markets. And analysts are continuing to revise earnings estimates up for this stock. So they're looking for 42% growth in 2019 and continued growth into 2020. And the company came out last time they reported earnings was back in August. And these retailers are the last of the bunch to report earnings. They tend to do it toward the end of the given quarter. So many of them are not due to report again here for a while. But let's go ahead and move on. SCVL is the next stock that we're going to look at. And this is Shoe Carnival. And this company they came out with earnings. Take a look back here at the end of August, this big gap up. The company jumped, the stock jumped 32% on this super strong earnings, and the stock is just pulling back very orderly to this upward trending 50-day simple moving average. I do a lot of work with simple moving average as far as identifying where a stock may pull back. If it does find support, as this stock is, that is generally quite bullish, and you can see that the MACD is poised to turn positive here after having a positive crossover. So Shoe Carnival is another one. We can look at PLCE. This is a children's wear. It's called the Children's Place, and the stock is actually hitting a one-year high in price. This is another company where analysts are revising earnings estimate higher. And the company, they have a wonderful management team in place that about 5 years ago, they put a 5-year plan in place, and it is all really working out quite well as far as their product placements, digital marketing, and the whole package. Another one we can go ahead and take a look at is Fossil. This is a watch company, FOSL. It's not quite as dynamic as the other names that we've been looking at, but it is another one that has been coming out with really superior earnings. They do tend to appeal to men's watches, and there has been growth in that area. Take a look at this pullback, rather orderly, right back to that upward trending, in this case, 200-day simple moving average. Certainly given the market dynamics, we're not in a position to load the stock up, but I would tell you to look for that RSI up here to trend above this net neutral, as well as the MACD to come up into the positive area before considering it. But it is a company that is on the path of growth. And let's go ahead and take a look at Walmart. For those of you that may have been looking the other way, Walmart is really outpacing the broader markets. And you can see this gap up here. The company has been coming out with announcements, and a lot of it has to do with restructuring, their ability to deliver. We're coming into November is infamous for being that holiday shopping period. So a lot of these companies are shuffling and making changes so that they can benefit from, particularly with Toys R Us out of business, there's a big gap and need there for companies to come in and take that over. And we can take a look at McDonald's. This is another large cap growth stock. This company has been expanding on their franchise. They've been growing. They've also done a lot in the way of menu changes, and the market, actually consumers like that. The company just came out with very good numbers, and analysts are continuing to revise the estimates higher in the way of growth. But this most recent, actually, if you take a look, they did report, they came in with numbers that were well above estimates. This is this gap up that we're looking at here. So those are some of the areas. And then these auto parts stocks, a number of these companies reported this week, and the markets really liked their numbers. MNRO is one that we can take a look at. And these companies provide auto parts. And we can see with MNRO is Monroe, and the stock came in with earnings that were about 6% above estimates. And in response to that, the stock had a 12% move here yesterday, and it's actually adding to that today. And if you can certainly take that into account given what's going on in the broader markets, but we can see this MACD is trending up into positive territory. The RSI is positive. So again, no signs of paying attention to the broader markets. We can look at a couple of others in this auto parts area. This is certainly earlier in its potential advance. SAH is Sonic. This is another company. Now, these guys did come in with earnings as well. They were a little bit more flat. Analysts are actually revising downward subsequent to their release. So this would not be certainly as vibrant a viable candidate. But let's take a look at one other stock in the auto parts. LAD, this is Lithia Motors. And you can see this gap up in response to strong earnings. The company came in with numbers that were about 12% ahead of estimates, and the stock gapped up. So what we have here is a stock that is gapped up above that downward trending 50-day simple moving average. Your RSI is positive, your MACD is positive. We still have a barrier here with a downward trending 200-day simple moving average. If the stock were to break back above that and thereby pull up this 50-day, then it certainly would be a bit more interesting. And let's take a look at one other name. Oh, sure. Go right ahead.
Yeah, I got a question because on this chart, the LAD, I mean, we've had a lot of bottoms going back into May and July, right at about the 95 area or just below.
You
And
bet.
gap resistance, big volume gap down back in July.
Mm-hmm.
Does that bother? I mean, in addition to the 200-day, which we're going to have to try to get through, does it bother you that the stock has moved up so much here in the near term and it's right up against that resistance and the 200-day? I mean, is this something that you would put on or that you would wait for some kind of a pull?
Yeah, I would not put it on. This gap down here was earnings related, huge volume. You can see that the stock decelerated subsequent to that. This is interesting. We like to call this the hockey stick, where it's had this downtrend and then it tends to try and reverse, but you are certainly not out of the woods. You may see a rally up to this 200-day, this moving average, but by most accounts, it will very much probably find resistance here at this 200. Ideally, before even considering buying it, you'll want to break back above this downward trending. This is very heavy. Break back above that 200-day. You'll want to see that happen on volume. That volume is going to tell you that institutions are in there and it will help propel the stock higher. But we're certainly on the right path because it has broken up above that 50. So in turn, ideally at some point, this 50-day simple moving average will trend upward. You will want to see that. So yeah, we're a little too early. It's interesting now. We might see 91 up to 96, a little bit of a maybe 5% move, but beyond that, you're probably going to run into some trouble.
Okay. Well, there's another stock now that, I mean, just moving into another area of consumer stocks. And I know you talked about retail, so this kind of mixes both of them together, except that it's a staple stock, a food retailer, and one that's been holding up well. I know NGVC. What are you seeing with that one?
Oh, sure. Yeah, actually, we talked about this stock last week, and you're absolutely right. It is a combination. It is a food retailer, and as such, it is in the consumer staple area. And this is a smaller cap company. It's about 300 million, and it's Natural Grocers by Vitamin Cottage. So they have food products, but a big part of their revenues are sourced from vitamins. They have skincare products and so forth. And many of you may know that those are very high margin products. So they are, in addition to having that product mix, the company is growing. They are opening new stores in the Colorado area. They're located generally west of the Mississippi, if you will, although they do have stores in Nevada, but they're a real growth story. They've also been targeted as a potential buyout candidate as far as at some point. But at this juncture, you can see that the stock is trending quite nicely, actually. This green line is your 10-day simple moving average. And what you want to see with stocks, if you are interested in potentially getting involved, you want to see an upward trending. Take a look here during this uptrending period, how the stock found support at this upward trending 10-day simple moving average, as opposed to a period of decline where this 10-day becomes resistance and it's downtrending. So we are back in that upward trending 10-day shorter term simple moving average. You'd like to see that cross over, that 10-day crossing above that 50-day simple moving average. And then your MACD and RSI are both in positive territory. We've had that positive MACD crossover, the black line up through the red, and it's also above this net neutral zero. And your RSI is above this net neutral zero as well. So generally quite positive. That was a good call on that stock.
All right,
And,
I got another stock that I know that you wanted to talk about today. And first of all, a lot of folks out there might be surprised, but mobile telecommunications, which is part of that new communication services group, is the only industry group that's actually higher in October. It's up more than 5%. And most everyone thinks, when you think mobile telecommunications, you might be thinking T-Mobile, or you might be thinking SBA Communications Corp, Sprint, some of those
mhm,
names. But I know
you
you
bet.
have one that is maybe
Yes,
not as well known, but certainly looking pretty good on the chart. What do you have there?
you're absolutely right. There is a stock out there that has had a significant move here over the last couple of days, and it is an unusual story stock. The company is ticker TKC. It's Turkcell, and it's a Turkish mobile telecommunications company, and the stock was up 11.6% yesterday. And here's the whole story here, because you can see the stock had been in a downtrend. It's starting to turn, and the reason is because yesterday Turkey's central bank, they announced a big boost to interest rates. They raised their interest rates 24%, or 6% percentage points more than previously. So the impact there, this will all make sense as I move on here, but the rise in rates boosted the Turkish lira's value against the US dollar, and that was for the third straight day in a row. This particular company, TKC, they carried $2.5 billion in long-term debt on their balance sheet, and relative to their cash reserves, that's quite a bit. Their net debt is $1 billion. So most of that debt is in foreign currency. So when the Turkish lira was weak, the stock really did quite poorly. So that has everything to do with this big boost over in Turkey on their interest rates. So the stock is turning. It's certainly going to be a riskier play, if you will, because you're not buying a company and their balance sheet. In essence, you are, because of their debt, but it has everything to do with the country's currency and the rise in interest rates. And that company, the stock, is continuing to add a little bit to its price again here today.
Well, if we can just move to one more group, because we did just mention on consumer staples a little bit ago, and there, obviously that's been one of the better areas of the market. And I know we want to save some time for what's not hot, because we could probably talk about that for 3 days. But what do you have a couple of names in the consumer staples area that you've been watching?
Yeah, actually I do. Let's take a look at USNA, if I can go ahead and get this ticker symbol up. And this particular company is USNA Health Services, a little bit earlier certainly in its move, but it is something just worth pointing out. It's a cosmetics personal care company, and this particular move here, the stock undercut that 200-day moving average. Huge volume. Take a look at the buyers that came in, supported the stock, closed in the upper portion of its trading for that given day. It's all about the earnings. The company came out with numbers that were 10% above estimates, 22% year-over-year earnings growth. But again, we are early. This is more for your potential watch list, because again, you are going to want to see the stock continue to advance. If it were to break above that 50-day simple moving average, the RSI were to get positive, as well as the MACD. We've had that positive crossover. We're not quite up above that net neutral yet, but certainly one for the, again, keep it on your watch list, because the numbers were really quite good. And then we can look at a couple of quickly more staid. LANC is a food company, Lancaster Colony, and we can see the significant move that this particular stock has had here recently. And this is another earnings related. They came out with numbers yesterday, and the earnings were about 11% above estimates, and analysts are raising the estimates going forward for this year and next. They've come out with a couple of new products that have people talking. So
Question.
oh, sure.
Sorry to interrupt.
Mm-mm.
I looked at the volume, and I saw the volume is typically many days under 100,000 shares. Does that bother you for some of these stocks that maybe aren't as liquid as others?
Not really. I think the volume on this stock looks adequate enough to keep people interested. The market cap on this stock is 4 billion, but I think you're fine with that volume. Yeah, but that is a good note, because on that as well, the pickup in the volume in response to earnings has really been significant, and that is what you generally like to see. As far as the concept of the stock being propelled even higher, it might work.
Okay, cool. Did you have another one, or did you want to move on to what's not?
Yeah, there is actually one that people might not always pay attention to, and it's NSRGY. This is Nestle, and we can see that the stock is another example of a consumer staple stock that is really doing quite well. Now, this company, they did post a 30% rise in their quarterly earnings on October 20th. So we can see that the stock gapped up in response to that. And this particular stock is an ADR, but we can see that the RSI is trending positively, as is the MACD. So it's not a stock that really rolls off a lot of people's tongues, so to speak. You don't hear a lot about Nestle, but they did come out with some good numbers and potentially resuming this uptrend that they had going on in the summer months.
Okay.
So.
Well, let's go ahead and move on to what's not. I want to just share something real quickly, and I think it might be, I don't know if it'll be a surprise for everyone or not, but let's take a look first at the long-term chart of the US dollar, because back in 2002 to 2007, when we had the other bull market of this century, we had a declining dollar. And as a result, you can see the CRB index, which is an index tracks commodities, was going higher relative to the S&P. The materials XLB going higher relative to the S&P, crude oil prices going higher relative to the S&P, and the XLE was moving higher relative to the S&P. But in this current environment, this bull market, we've actually been seeing a rising dollar. And so all of a sudden, commodities have not been have not really played a part in this bull market rally. And even though materials have gone higher, you can see that the XLB relative to the S&P 500 is about to move to a 6-7 year low. And then you look at crude oil prices, which have tumbled relative to the S&P, along with XLE versus the S&P 500 has tumbled. So I just want to use that as a backdrop and show that the dollar over the past month has been very strong. We're seeing this dollar index bouncing literally over the last 30 days. And when we pull up the sector summary, you can see that energy and materials, even though everything has really been struggling, energy and materials continue to be the weakest area of the market. And I know you had a couple of energy stocks. I think I looked earlier, and oil prices today were flat, but we're about $10 per barrel off of the recent highs. I'm just wondering, what impact that might be having on some of the energy stocks you're watching.
Yeah, that's actually a great observation. And I'll go ahead and grab the screen and we can take a look at some of these names, because that rising dollar has a lot to do with what we're seeing going on with these commodity pricings, where the commodities are dropping. And energy has another story as well. And let's just take a quick look at the oil USO. We can take a look at oil prices using that chart, and you can see this significant drop off we've seen here in oil prices. And sure, a lot of that does have to do with that rising dollar. And we're also have geopolitical swirling around tensions going on that are also impacting. And there's one thing in Saudi Arabia with the killing of the US journalist. There was talk of potential production cutoffs and problems there, but Saudi Arabia has come out and said that they are not going to cut back any production. So oil is still alive and well as far as production levels, and that's going to keep the price down as well. So we can look at areas, and I've talked about this in the past as far as energy stocks, and when you see the price of oil drop like that, there are areas that are going to get hit harder than others. And certainly one area is called exploration and production. Those stocks as a group are down 10% this week. And we can take a look at a couple of very prime examples here. EOG Resources, take a look at that ugly chart, this really significant decline that we're continuing to see in that stock. Certainly other examples that we can look at, OAS. And I'll tell you, both of these companies have superior fundamentals as far as their earnings outlook are just really triple digit, very, very strong. But they are just not going to pay attention to that. The price of oil is going to trump that. And another stock we can take a look at that's down 24% this week. This is EQT. And this stock, you'll see this in the markets in general. When a particular industry group gets hit, those stocks that were already weak, we can see that it already was in a downtrend even while oil prices were going up. Those stocks are going to get hit the hardest. This is down 24% as opposed to EOG that we were looking at that had held in, was looking quite strong. It is down this week 10%, but not quite as much. So that's a phenomenon to keep in mind if you pay close attention to sector rotation. Those already weaker stocks, when the sector falls out of favor, the weaker stocks will get hit harder. We can also take a look at the industrial sector, and let's take a look at XLI, because this is almost shocking in the sense that you can see going into the beginning period of this month, well into the first week, industrials appeared poised to hit a new high in price, but they pretty much have fallen off the cliff. So what we can do here is take a look at some of the heavier hitters here, because these guys have come out with earnings and they have shocked the markets. This is Caterpillar. Take a look at that gap down. And the reason has everything to do with their earnings. Management came out and announced that they are already seeing tariff-related headwinds to their earnings. So that the concept that tariffs would impact companies was really just that. It was just a concept, but now we're actually seeing it take effect. So Caterpillar is one company, 3M is another one that also came out with numbers and the management talked about tariffs impacting negatively their numbers, and not only currently, but going out forward. And also take a look at Deere, DE, and this is an agricultural products as far as their trucks, and you can see that this company dropped. Now, they did not report, but it's all very much in line with these other companies that have reported and the concept that these tariffs are going to impact them. There's also other areas that are going to hurt these companies, and that certainly is signs of economic slowdown in China. And for those of you that might not know, China's been in a bear market, and so that is also raising concerns relative to demands for these Caterpillar, Deere, companies of that nature. We can take a look at CMI, and this particular, this is Cummins, and this is in that trucks and heavy duty parts area. And this is another company. They're due to report earnings next week, but you can see that the market is discounting already the prospects of negative earnings, again, due to this global slowdown and tariff related. So that is an area that has been getting hard hit. Another area within the industrials are these defense related stocks. And let's take a look at a positive within Boeing reported earnings. This is, I'm going to say positive, but it's relative to the broader markets. Boeing has held in. The company did report earnings this week. They were above estimates. The street is raising earnings estimates going forward. But on the negative side, within defense-related stocks, take a look at Raytheon. You can see that the stock has really gotten hit. They came out with numbers, and the numbers were actually quite stellar. They were 50% above estimates, and but you just wouldn't know it based on this particular drop that we're seeing here in Raytheon. We'll take a look at GD is another one. They also came out with earnings. The company raised guidance going forward, but they just got knocked down. And the reason is because a lot of their earnings, management talked about the tax cuts being the primary driver of those positive earnings results. And of course, the street doesn't like to see that. They want to see growth that's organic. They want to see perhaps the company is winning bids, growth outside of just tax cuts, because as we all know, the initial impact is going to be positive. But if you go out 2 quarters, those tax cuts are going to the positiveness from those are going to dissipate. So we can see that these two companies are really getting hit within defense. And also the other reason is they're calling it the Saudi Arabia situation, because we are still a bit tension there with going on between the US and Saudi Arabia. These companies do have Saudi Arabia is a client of theirs, so that's also negatively impacting them. Another area in industrials are transportation stocks, and we've talked about this before, where some of these, particularly these trucking stocks, this is Old Dominion Freight Line, and we can see this significant continued decline for this stock. And this again is despite promising fundamentals. They're looking for 61% growth this year for the company, estimates being revised upward, but the stocks continue to get hit. And FWRD is another one that's in that area. And this particular stock did come out with earnings that were below estimates, so that stock's getting hit. But let's take a look at UPS, and this is a freight forwarder, of course, and we can see that this stock got knocked down. The company did come in with earnings that were in line with estimates, but then going forward, their revenues missed, and we talked about that today with Google, with Amazon, where they come in with superior earnings, but when those revenues miss, the market just is not going to appreciate that.
It actually looks on the chart like UPS maybe is trying to bottom with today's candle, looking back at that prior low from just a few months ago. But we'll see whether or not it can continue to hold it into the close. But we are seeing the market strengthen quite a bit currently. So I know that there was one other area, because we're going to go ahead and need to wrap up here, but there was one other area that had been performing pretty poorly over the past week, and they're trying to bounce today, and that was the biotechs. Is there any particular stock in that group that looks interesting to you here?
Well, most of them look, I know you had mentioned earlier, Gilead came out with good earnings. A lot of these stocks that I have listed here, they do not look good. And a lot of it has to do with FDA denials, Food and Drug Association, poor earnings results. So like a BIIB is Biogen. They came out with poor numbers. The stock's getting hit, although it is up 2% today. So if you want to look for, but I'll tell you, the numbers just aren't there. This is a company where one of their products, FDA denied approval. So a lot more on the downside within the biotechs, and that Align ALGN is a medical equipment that really shocked a lot of people. This was a big, strong, beautiful growth stock for actually over 2 years. But you can see this big gap down here. They came out with earnings, and the stock just really got hit. And a lot of that has to do with the concept of a global slowdown. You're going to see more and more stocks that do business and are looking for growth overseas. They're probably going to get hit. The IMF came out and downgraded the prospects for global growth. And also when we see the strengthening dollar, so all that's going to hit these stocks.
Okay. Well, I know you went through a lot of stocks. Why don't we go ahead and do a quick summary of all the different stocks that you talked about? And I tell you, even though we've had a really rough week, and we are seeing a pretty big reversal today, which I think could bode very well going into next week. We'll see if we continue into the close. But even this bad week, we have seen pockets of strength, and you went over a number of those areas. Many of the retailers have really held up well when you look back over the past week. along with, as you mentioned, some of the auto parts companies and food retailers and mobile telecom been very strong.
Hmm.
Kind of
Yeah.
surprised here.
And
But
some of those mobiles, Verizon, you look at some of them, they also offer a nice high yield in addition to that 5G growth that has everyone super excited. So I would put Verizon on your list because the stock really looks super. But let's talk about the retailers, because this is something that I follow super closely as far as retailing growth, tech stocks, and so forth. And I will tell you, during the correction earlier this year, January, February into March, those retailers were popping up like flowers in a stormy environment. And it was really just amazing to watch these stocks blossom. They were ignoring the downtrend that was going on around them. So I will tell you, looking at, for instance, a Burlington, BURL, we talked about that stock really holding up well. And I was really encouraged because again, going back historically, those retailers were the first to show any kinds of strength. They were resilient against the downtrend going on all around them. So I would look at it as highly encouraging because they're not being driven by earnings. I talked about these companies really don't report until the end of earnings season. So the fact that they're getting traction now, I'm going to latch on to any possible positivity, and that would be one.
yeah, I definitely agree with you. I think if the market does bounce, we want to watch that group to see if they are able to break out and maintain that relative strength that they have been able to enjoy here recently. But let's
Hmm.
go ahead. We're going to move on to the 10 in 10. And as I mentioned at the top of the show, these are going to be stocks where we are seeing deterioration in their scooters, and whether or not maybe we can perhaps see bottoms, or has their character changed. And so the first one that I wanted to go over was Digital Realty Trust. This is DLR. It's in the retail, or excuse me, the real estate space. And when you take a look at DLR, today's been a horrible day. There's no getting around that. Stock down 7%, down $8 to 108 and change. It did test the 50-day moving average. It failed miserably, came back down. So short term, it's got some issues. But I did want to at least identify an area of support and resistance that has been pretty strong in the past. This 106 to 108 area on the way down held several times. On the way up, we struggled, and then we finally got through. The last time we saw all of this selling in volume, we held that 106, 108 area, and today we went back into it again. So what I would say is that I don't like the action today, clearly, but this is a low risk, high reward kind of a trade if it does hold on to that 106 area. Next up, let's take a look at CTL. This is CenturyLink. And CenturyLink broke out and has come back down and tested the breakout area. This is a stock that I think if the market rebounds is actually in a pretty good position here, because this was an area that I would have been looking for on a breakout to come back down and retest. And yet we just kept going higher. But over the last couple of months, you can see the volume kind of settled down. We actually went all the way back down almost to the top of gap support and now starting to reverse back up. So I think CTL, which is in the communication services group, I think this is a stock that could be putting in a bottom today. So if we get a reversal here, I would be looking for CTL to perhaps make another move back to the upside as we start next week. But we'll continue to watch that one. The third stock that I have is CHTR. This is Charter Communications. Now, they did report. We talked about them earlier today. But the question is this an area maybe to get involved? They had come out with some really strong numbers. I mean, they on the bottom line doubled the expectations, $2.11 versus $1.05, but they did come up just short on the revenues. And so question is this an opportunity with the stock down 5% today? I think that this reversal is pretty strong on the volume that we see. And this is actually looking to me like an exhaustion gap to the downside. Down volume, or excuse me, downtrend in play, huge volume. We put in that tail. We never even went back down there. We've been trending higher. So when I look at a chart like CHTR, I think that the gap support from all the way back here in late July, see this gap up and the volume pick up, tried to get through that prior resistance, couldn't do it, sideways consolidated and then broke out. It's now come back down and tested this area. This is one, again, that I could keep a fairly tight stop. I think if we go below today's low, I would not take a chance. I'd get out. But if it does hold here, I think they could make another run back for that recent high up above 330. So CHTR looks like an interesting name to me. And a lot of these charts, by the way, it's going to depend on how we close today. Knowing the historical tendencies, very bullish starting next week. I think a reversing candle here with such high volatility would be great news for the market heading into the beginning of next week, but we'll see. We do need to get that strong finish. NTAP, Network Appliance, been a very strong stock in the market, but you can see it has recently been struggling. It broke down below its moving averages, went up, tested the 20, failed, and today gapped down and looked like it was breaking down pretty significantly earlier today before reversing. Now, I see a couple positives here with Network Appliance. Number one, it has been a great stock. So let's first draw in a key support level. Why is this one key? Well, when we broke out of this above this range at about $71, $72, the volume was pretty consistently high. Nice accumulation taking place, and we never went back and tested that area until today. It looked like we were breaking down below it this morning, but we have since moved back higher. And I could really look at this and see lower prices and a slightly higher PPO. So I think a reversing candle at support with a positive divergence, this is one that I would be, considering if I was looking at individual stocks. All right, next up is Lowe's, LOW. All right, let's take a look at the chart here. I mean, when you look at this Lowe's chart, I think, well, first of all, we lost the support. So I think that was pretty, that's a pretty big deal technically. You do have the pullback where we did get down to about 93, and we're trying to bounce off of that level. And since the big move up back in May, that was the reaction low. So when I'm looking at the market, or if I'm looking at individual stock, I start looking at areas where maybe we could get reversals. And I would say that one of the big ones would be this right here, because this is where we had the breakout, the change in character from a downtrend to an uptrend, heavy volume. And since then, the pullbacks have not gone back down below 93. So this is another one where, hey, if we're bottoming, I could get into lows, keep a fairly tight stop, and make a push maybe back up toward that 20-day moving average. All right. Next up, let's take a look at Seattle Genetics, SGEN. This is in the biotech space. And the stock really got hit earlier today. It's kind of hard to make a big argument for this one. I mean, outside of just the fact that it's lost a lot of ground and maybe we get a bounce, this was a stock that was flying high heading into the beginning part of October, up near $85. Today it opened just above 50. That's a major haircut. Obviously, something big is going on. We were already bounced back or pulled back from that earlier high. I think this was maybe just an initial reaction. I'm not sure we don't go down and test this 47.5 area. So this is one that's seeing its scooter drop significantly that I would be really careful with. I think with all the selling and the massive gap down today, outside of this quick move back to the upside, which may be market maker related, I think we're going to head back down. I think that 47.5, 48 area could come into play here. All right. SABR. This is Sabre Corp. This is in the consumer discretionary space. And I'm looking for, a key area to hold. And I think that where we just went down to recently is a key area. I mean, here was a double top. We broke out. And after that breakout, you can see these lows coming back down here. 23, just above 23 to about 23.5. We did look like made a false breakdown here on some increasing volume just a couple weeks ago, but we rallied back up. Now we come all the way back down and just about put in a double bottom here. I think this is an area, I think a move much below 23 would have me nervous on SABR. Otherwise, I would say this pullback again could be setting up a nice reversal and uptrend on SABR as we head into next week. All right, next up, Under Armour, UA, another one in that consumer discretionary space. And this is a pretty nice looking candle today so far. And if we go back and we pull up prior resistance, which is right about there, when we broke out in May, you can see the volume pick up. We had not gone all the way back down there until about 2 weeks ago. And I think we're putting in a double bottom. I think UA is another one where today's tail is likely to be marking a major bottom. And if the overall market goes, I expect UA to have a very strong week next week off of this candle. Now, again, this is intraday. Who knows if all of a sudden the market falls apart this afternoon, we got a completely different animal. But if we continue to strengthen, I like some of these reversing candles at support. All right, that's number 8. We got 2 more here. All right, number 9. Let's take a look at, this is a company I think that reported earnings yesterday, last night after the bell. Lattice Semiconductor. This was one of the strongest. I'm going to put this one up on the relative chart. This was one of the strongest stocks within the semiconductors until the beginning of this month. Stock was up over $8.75. Look at how long it took this stock to go from $5 up to $8.75. It was about 5 months to do it. And in 1 month, we've almost given it all back. And literally here, just in the past 2 or 3 days, we've given the majority of it back. But if you take a look at the relative chart, this is what I was talking about. See this uptrend? Not today, but just recently with this pullback a couple of days ago, we lost price support and we also lost relative strength support, relative support. Let me show you what I'm talking about here. So, well, first of all, let's just put in that price support. I think it's pretty clear that this 7.25 area to 750 had been very significant support. And we went right through it and closed beneath it 2 days ago. Not a good sign at all. We also, if I put in this would be the bottom of gap support. It closed below that as well. So there are some definite negatives here that occurred 2 days ago. But perhaps the biggest one for me is that when you look at it on a relative basis, that selling 2 days ago took out a pretty key uptrend, a relative uptrend. So this stock now, with the group overall so weak and underperforming the S&P 500, look at semiconductors over the past 5 months, one of the weakest areas of the market. Now all of a sudden you got a stock that is being treated like all the rest of the semiconductor stocks and moving lower. Yes, we got potentially reversing candle. Maybe we get a bounce for a day or two, but I think today's candle is a big game changer on LSCC. I would be looking to exit it or stay away from it on strength. All right, final 10 and 10 stock is INGN. This is a healthcare stock. So we'll pull up another relative chart here. And you can see that this stock actually topped back in September. And the group was continuing to move higher for the next 2 weeks. But we started seeing underperformance here. Check out the underperformance relative to the group. And now we've seen volume pick up, selling really kick in here. We've lost a number of support levels. And so even today's reversing candle, I'm not sure would be enough for me on this stock. The overall group, though, remains strong. So let's take a look at maybe a couple of levels to watch here on INGN. One problem that I had was losing this gap support. We had big volume here. Check out the big move up, gap up. We came back down, held, moved higher, went down below the gap support, and look at where we back tested, right to that 215 area before moving lower. Now, we do have a reversing candle so far in today. Maybe we get back up, test that 20-day moving average. But I think for me, that's where I would be watching the stock to see whether or not we can get back through that area on the chart. So those were the 10 stocks that we looked at. So let's pull up a summary slide. And so those were the 10. And again, if you came in late, I just looked at stocks that where the scooter scores had dropped out of that hot area that we talk about, 70, 75, 80, and we're down significantly. And some of these are reversing. Some of them, I think, do present some opportunities. But we'll see how the market closes later today. All right, let's take get another quick market update, and then we'll get into our final segment of the day. And you're going to see that we have rebounded significantly in the markets, which I think is very bullish. You got the Dow Jones Industrial Average only down 113. I think it was 350 when we started the show just a little over an hour ago. So really nice rally in the Dow so far. S&P 500 down 18. The NASDAQ, look at the NASDAQ, only down 44 now after being down a couple of hundred earlier today. We did go below the low from a couple of days ago. There are some positive divergences on 60-minute charts as well with those earlier lows. So I think all of that is suggesting that we could be putting in a fairly significant bottom here today. The NASDAQ, though, currently down 44. We got the Russell 2000 all the way back almost into positive territory. Big reversal here on the small caps. I think when we started, I think we were down to like 16 or 17 points, if I'm not mistaken, more than 1% an hour ago. 10-year Treasury yield also bouncing back a bit, back up to 3.09%. Volatility, a big reversal here in the volatility. That is good news for the bulls, with the volatility index now down 2.7%. Consumer discretionary, big reversal, still down, but well off the earlier lows. Communication services, same thing. Very nice hollow candle. We are, again, still down a little bit, but fractionally lower in these two groups after the Amazon report and the Google report. I think it's pretty good news. And here you can see Amazon putting in a hammer at this point, trying to move back up above the close from 2 days ago. So far successful doing so. Google has actually gone positive. That is a really nice candle today on Google. Intel continues to strengthen, clearing 46. This is a stock that could provide some leadership next week. And then, of course, the stock that had taken such a big tumble earlier is still down 28%, but it is off the earlier lows. All right, we are now going to move into our final segment of the day. And Mary Ellen, if you'd like to get started, we are going into sector rotation, and you are free to talk about whatever you would like about sector rotation.
Well,
take it away.
Certainly exciting. Okay, what I've done here is, this is the candle glance, and you can populate this with, of course, your own tickers. Tom uses it all the time.
Make sure you grab the screen. Just wanted to mention.
Oh, you bet. That would help so that people can see. Sure. Yep. And what I'm going to be showing you is the healthcare sector. And I wanted to focus on this sector because this is an area that actually had been outpacing the broader market, certainly in the first part of, let me just go ahead over to another area and we'll take a look at XLV. That's the ticker symbol for the healthcare ETF. And we can see that healthcare, certainly going into October, was hitting new highs, clearly a leadership group, but it more recently has, and then even into October, we did have a little bit of a drop, but then it came back up above that 50. It was looking quite healthy, because healthcare can be considered a defensive area. A lot of the products they provide are still going to be needed regardless of the economy or any other tariff-related tensions and so forth. So what I've done here is taken the subgroupings within the healthcare area and put them up against other various areas, sorted it by RSI, which is relative strength. So we're looking at strength to weakness. We can see the VIX is up here in the forefront. We've had certainly a big uptick in volatility. This is the dollar. We talked about the dollar showing strength. Gold is an area that's been outperforming as well. But now we're going to get into these subgroupings within healthcare. And I did want to point that out. These groupings are still outperforming the broader indices. So here is the Dow, here is the NASDAQ, and the S&P. So this is a subgrouping within healthcare. And this particular group is, we're going to go right into it, but it is healthcare providers. So these are going to be insurance providers, managed care areas. So just wanted to take a quick peek at some of the underlying stocks within it. This is Cigna. It's not a great looking chart, but certainly relative to what's going on around it as far as the broader markets. We can take a look at WCG, is another WellCare group that is really holding up remarkably well. So those are some examples. So healthcare providers are continuing to outpace the broader markets. And then we can if I can get back to where we were before. Yeah, so here we are. We can take a look at this next subgrouping within healthcare that is outperforming the Dow and the NASDAQ and so forth. This is pharmaceutical stocks, and we can take a quick look here because they are still not looking terrific, but definitely outpacing the broader markets. And some of the underlying stocks within here that one might want to keep an eye out for is Eli Lilly. You can see that it's had these little bit of breaks, but overall holding up well. So that was something that I wanted to point out, because then the next subgrouping that certainly is better than the NASDAQ, this is, let me just take a quick look, medical equipment. And medical equipment has gotten hit within healthcare quite a bit harder. There are a lot of high growth stocks in here. The market's appetite for high growth companies dissipated, so it got hit. So within healthcare, it's not quite as strong, but certainly those healthcare providers and the pharma stocks. So when you are in a market that is in certainly a correction, you want to key in on those areas that are able to withstand the downward pressure in the broader markets. And this is historically proven, because those groups and areas are the ones that are going to, once those market pressures lift, they are going to outperform the broader markets. So my look at this sector was with an eye toward areas that are, for the most part, withstanding. And we've already talked about discretionary, consumer discretionary and retail. So that would be another area to keep your eye out on. Again, for when those market pressures lift, you want to be in those areas that, what I like to say is, you're letting those future winners reveal themselves to you, because they are bucking the downtrend. Again, so that when those pressures lift, they're going to have much more ability in the way of outperforming the broader markets. So that's one area. I know that Tom talked about stocks that are reversing, and this is not so much sector related, but let's take a look at VR TX. And the reason I'm pointing this particular stock out is because not only is it in the healthcare, this is a biotech stock, but this is a company that has super strong fundamentals. This company is on track for 97% earnings growth over the prior year, but they did come out and report earnings earlier this week, and the company came in with earnings that were 100% triple-digit growth over the same quarter the prior year. And so we can see that the stock did get really quite low, and Tom's been focusing on this and talking about these potential reversals. So this is another area or another way that you can, if the markets, as Tom is suggesting, are potentially bottoming, these companies that have come out with strong earnings and they are now potentially reversing. We can see the stock is now back, pardon me, up above that 200-day simple moving average. Now, from my work, the RSI is still not positive. We're still above that net neutral dashed line, and your MACD has not really even started, because initially you'll want to see that black line up through the red, and then you will want that MACD to come up above this net neutral, similar to this period here. So we might be a little bit earlier in the potential reversal than I had originally thought, because you will also want to overcome these simple moving averages. But that was one certainly within healthcare that I wanted to take a look at. Another healthcare stock that really got hit, and I would argue it got overdone to the downside. This is Align, ALGN. We touched on it briefly because the company did come out with numbers, and it really just was down 24% yesterday. But when you see these stocks that get oversold, you will want to be on the lookout for a potential bounce, and you may get a move up to potentially close part of that gap. And when I'm looking for reversals of that nature, what I'm going to do here is go ahead and put in what are called stochastics. They are a momentum indicator, and they really are quite powerful in helping identify potential reversals, either up or down. And unfortunately, this is not confirming my thoughts, because when you are keying in and looking for, first of all, it is showing us that the stock is oversold because it is below that 20 level. It's not easy to see. So ideally, you want these stochastics to turn up. But again, this is all with an eye toward a stock that really got overdone to the downside in response to their earnings. You can see the RSI is in an oversold position as well. So what you can do for these types of stocks that get really hit is go ahead and take a look. I don't do this often, but this is an intraday chart, your 1 hour chart. Again, ALGN, Aligned Technologies. The way you're going to use this is very similar to your daily and even your weekly. You're going to want to see that RSI. In this case, it's coming out of this oversold. It's starting to trend up. Ideally, we do want to see it up above this dashed net neutral. The stochastics are also starting to turn up, but this is the way that you can potentially play a possible reversal. We are still a little too early, but while we're here, let's go ahead and take a look at the other stock that we were talking about that came in with strong numbers after and could potentially be reversing. This is a little more positive. Your stochastics on VRTX, Vertex on the 1 hour chart. Your stochastics are now trending up above this net neutral, so that's quite positive. Your RSI up above here as well. And the simple moving averages that you would use on a 1 hour chart are certainly going to be different. You're going to want to use the 5 and the 8. Those are very effective. I'm just going to leave that 50 in there. And that's going to be another actually powerful way to tell if the stock's reversal could continue. Let's just go ahead and remove this 50 to keep things clear. And we can see that the stock's price is above these now upward trending simple moving averages. So this Vertex is one on that 1 hour chart, certainly super short term, but it does look constructive because, again, you're up above these now upward trending simple moving average, your MACD, and your RSI. I'm sorry, I put the stochastics down here on the bottom, but they are both positive. So that's one way. Tom talked about a lot of the other potential reversals. UA is one that Tom mentioned. This is Under Armour. This company is due to report earnings next week. We can see how the stock could, from this 1 hour chart of UA, we're not quite there yet, but we could be with the RSI potentially turning positive and, pardon me, the stochastics. Now, let's take a look at another area when we talk about sector rotation. And I'm going to, oh, I'm sorry.
That's
yes.
all right. When you get that last point, I just wanted to show everybody the RRG charts and how you can also look at it from an RRG perspective.
Go right ahead.
Did you have one more you wanted to show?
No, I was going to go into the financials being just totally dumped and how you can look for reversals there, but you go right ahead.
Okay, I think everybody will probably see it too on the RRG charts.
Perfect, perfect.
Financials. Let's take a look here. Okay, so first I just want to point out when you're in the members dashboard at StockCharts, over here on the left-hand side, if you scroll down, this is where you get into the RRG charts. So if you click on that, it's going to just bring up some symbols by default versus the S&P. I've already adjusted it, but here are all the sectors currently and how they're performing relative to the S&P 500. And this is a 1-year daily chart. So the cool thing about these charts is that you can see on a relative basis as we go in here. So over the course, say, of the last year, I can just drag this through showing the S&P 500. And over here, you can look at each one of the sectors to see how these sectors are performing relative to the S&P 500. So when we're going higher, you want to see what's leading the market. When we're going lower, you're almost always going to see defensive groups leading. But when you're going higher, you also want to make sure that those defensive groups are not leading. So we went through all of this mess back in January through April, and then we began to start turning higher. And as we started turning higher, do you see what's up here? I mean, we had energy, we had utilities, we had real estate, We had consumer staples. That's what leads after this huge decline. But watch all of that change as we started to move higher in the market. You see all of those defensive groups, for the most part, all of a sudden rotating. Now you've got utilities, real estate, and staples all moving into this lagging area. That's what you want to see when the market begins to rally. And so we had some other, drops later in the year. You can see at the end of June, all of a sudden at the end of June, here comes utilities back up. Here's real estate. Here's your consumer staples, because again, we're going through this period of decline. But once we start rallying again, look what happens to them. You can see that the XLP, XLRE, XLU all begin on a relative basis to underperform. They may all still be going higher, but they're not going up as fast as the S&P 500. And that's what you want to see. You want to see the resurgence of the aggressive groups as we go higher. Now, I just pointed this out because as we get to the end of this rally right here, on the move to the upside, look what's up here. What is consumer staples doing up here? What is utilities doing here? Materials are heading into leading. All of this when the market is setting that final high. Now, that doesn't necessarily mean that we're in for a bear market, but it does mean that the rally was probably losing legs. And I just wanted to point that out. We could, I could do a weekly chart, and maybe another day we'll do this when we have a little bit more time. But you can do the same thing, except just set this up on a weekly basis, and you can then you'll see the movements much more slowly as we go through these different time frames. And I think the weekly would be better for those who are looking from a longer term perspective. We could certainly, go to 3 years or 5 years and hit update. And then we could go all the way back here to 2016 and see what's been leading on a weekly basis. And it'll change because, again, you're looking at it from a longer term perspective. But anyway, that's all I wanted to mention. So we can pull up that final summary slide if we have one. If not, we can go right into the poll. We always do a sentiment poll. Well, we kind of didn't follow that today, but that's okay. Let's go ahead and pull up the poll, and we'll take a look at what everybody thinks going into next week. I can tell you right now, I am bullish the market. If we hold on to this reversal, given where the VIX is and the VIXN, and knowing next week is bullish, and seeing, one thing that marks bottoms a lot of times, we have it's a sell on the rumor, buy on the news mentality. And we have seen a lot of bad earnings coming out, or certainly in terms of revenues. And so there's been a lot of anticipation of that. And now that we're getting some really big companies coming out with that bad news, I'm not sure we haven't bottomed with what's going on. But I want to watch this afternoon and make sure we don't roll over and see things escalate again to the downside. But I'm beginning to think we're bottoming. So I would go higher for next week. Do you have an opinion, Mary Ellen? What do you think for next week?
I do think that we very well could move higher. We're in oversold positions, and we are seeing that nice bounce today, potentially into the close. But as far as calling a bottom, I actually have a system that was taught to me by Bill O'Neill, where you're looking for what's called a follow-through day, and you need to see the markets up at least 0.2% over the prior day on above average, on volume greater than the prior day. And this follow-through day, no down market reversal has ever occurred without that happening. And so that's what I would need to see before calling a bottom.
Okay. All right. Well, that's cool. We've got 51% of the respondents thinking that we do have maybe a bottom and that we're going to move higher. But I do want to just, we can pull up the schedule, or I guess maybe we already went through that schedule, but we do have a busy week lined up next week. I will be going through and showing my seasonality for November, so you'll want to check that out. We got Dr. Alexander Elder joining us next week as well. Thanks, Mary Ellen, for filling in for Aaron today. I certainly appreciate you doing so.
You bet.
And I want to thank everybody for being with us today. Please remember to complete that survey as you exit. We do love to get your feedback. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Friday afternoon, everybody. Enjoy the weekend. Be safe, and we'll see you back here on Monday. Happy trading.